Good morning, traders. This is Alice Lind with Tuesday's educational webinar. If you can hear me well, please put pluses so I can understand if you can hear and see me clear. Okay, thank you. I see a couple of pluses, so it means that you can hear me good. Okay, today I wanted to devote the educational webinar to the candlestick patterns. As we started in the beginning of this month learning the patterns of the market, the patterns of the candles. Right now we are going to proceed with that, and we are going to see how to analyze that and what patterns we can have on the market, and what do they mean for us, for our trading. So today's webinar devoted for two types of patterns. This is engulfing and harami. So let's see how do they look like and what do they see, what do they mean. Okay, let's start with engulfing. Of course, there can be two variants of engulfing chart and engulfing pattern. First one is bearish, and the second one is bullish. So how do we search them and how we can understand that? First of all, I wanted to specify that they are the most effective when you can find them in the oversold area at the end of the downtrend. So it would be much greater, it would be really great if the previous candles are of the same color as this one. So it means that, let's say it was the bearish bar, the bearish engulfing bar, and the previous candles should have been growing. And after that we see the long bearish candle. So it's after an obvious uptrend, bulls finally gap the market, gap the next candle open, but they close. The price closes below the whole candle of the previous price, the body of the previous candle. Of course, if it's confirmed by some indicators, let's say stochastic, and you see that the market is in the overbought position, so you can open the trade for low, and you can expect the further low trend, the beginning of the bearish trend. Here I switched to one day time frame in order to see if we had recently the engulfing pattern on the charts. So what is the most important feature of the engulfing pattern? As you probably noticed, they are of the two different colors, as the bullish as the bearish. So the first one is, let's say it's bullish candle, the next one is bearish, but the previous candle appears, opens and closes within the range of the body of the next one. And you see that even shadows, they are within the body of the next candle. So as far as you see, in this case, that's like the same. These two candles, they are of opposite color, and this candle is opened, closed, and all its shadows are within the body of the next one. So this is the most common feature for both of these, for this pattern, for the engulfing pattern. So let's say we had the uptrend, and here appeared like this candle, which shows us the high probability to reversal, to change in trend, and to start a new period, to start a new trend, which will be for low. Here the opposite. It's better to search for engulfing bar at the end, engulfing bullish bar at the end of the downtrend, and when it appears, it marks that that the trend can be changed, and we can expect the change in trend for the opposite. So let's see where we had the engulfing bar. Most analytics say that it's better to use these patterns on 1 day time frame, but of course if you find them in the down or uptrend, in the end of the down and uptrend, or within like shorter period of time, you can of course apply it for the shorter time frames and trade on them if you see them within time limits like 4 hours or even 1 hour. Of course, you need the confirmation from other indicators that you probably use. Let's say stochastic, that from some other indicator that shows you when the market is overbought or oversold. Maybe some of you see something on the chart and could give me a hint where to look for. Maybe you opened the different assets for the different time frames. Well, what I also want to mention that this pattern appears in the market pretty often, and it's pretty strong, because basically the time the price within the following candle engulf basically the changes in price for the first one, for the previous one. And basically it means that if it was like the uptrend, that the buyers, they are losing their initiative on the market, and it slowly goes to the sellers because they were more pushy on that day, and they like made much more, they sold for much more than the buyers within the previous day. As you see, this candle should be like bigger than the previous one. This is the same as here. It means that the sellers, they are losing control over the market, and the next candle appears to be strong, bigger and stronger than the previous one. So it means that the sellers finally lost control over the market, and the buyers pushed the price much higher than the buyers within the the sellers, I'm sorry, within the previous period of time. So this pattern is pretty easy to determine and pretty easy to understand how it works, and to understand how to act if you see this pattern on the market. Let's switch to the shorter period of time. Well, basically, each candle at the end of the trend, which is opens and closes within the body of the next one, and which shadows are within the body of the next one, are can be counted out as the engulfing. So you need to see if there have been like the long uptrend, and you see this pattern at the peak of it. It's absolutely okay if you will consider to consider the changing of the trend, and consider opening the trade for the opposite direction than it was before. So you will consider the end of the trend, let's say downtrend or uptrend, depends on what you had, and consider opening the trade, and consider making money on the reversal. So as far as you understand, this is reversal pattern, the change, and it's pretty strong, it works pretty good. So if you find it and specify it as engulfing, so it can work out pretty good for you. Okay, let's I hope that you understand how to search for them, how do they look like. Let's not waste time and switch to another pattern that I wanted to talk today, which is the harami. Harami can be called like the opposites to the engulfing, because in engulfing we see opposite, like absolutely opposite situation. But in this case, in harami's case, the candlestick, they can be of the same color, so that's not important for them to be the opposite colors. These two can be the same color, these two can be the same color, so it basically doesn't much matter. And of course, that's really important. The description of this pattern is really important for the next one to open and close within the body of the previous one. And the shadows of the next candle also should be like within the body of the previous one. So like that's all their common features. Like the first one needs to be bigger than the next one, and the body and the shadows of the second candle should be within the body of the first candle. But remember that they can be of the same color. So basically there can be like 4 variants of harami candles. The most important for us, it's the color of this candle, because it tells us what to expect from the market, and what can that the trend also can be changed. So also I recommend to search for the harami near or at the support or resistance line, or the trend line, because in this case they become much more significant. And when harami appears at the uptrend, it's a bearish signal, and when they appear on the downtrend, it's a bullish signal. Also, harami can be like can appear like which is called harami cross. So it means that the second candle should contain a doji. We spoke about doji with you the previous time. So in this you should easily recognize doji. So it looks like the cross, or it looks like a plus sign. And in this case, the information that gives us doji, it's more significant. And the longer our legs, or the longer our shadows of the doji, the more significant for change in trend we have here. Because in some cases it can be also like shown as indecision of the market. It can reflect the indecision of the market, because like on the previous time we see that here the sellers dominated here, and after the next candle they showed us indecision, they showed us uncertainty, and it can help us to understand what we should do next, what we should do following. Of course, it's also a reversal pattern, and it should mark for us the change in trend. So as I told before, it better to search for it like in the end of the previous at the end of some trend, and near to the lines of support resistance, near the trend lines. And of course it's much better when they when they confirmed by any indicator that shows us any oscillator. Well, that's pretty in this case, if it's confirmed, the signal on the market will be pretty strong and will show us on the potential change in trend. So pay attention to these figures, to these patterns, because they are like really interesting, and they can bring you a lot of money when it deals to trading, when it deals to change in trend, when it deals to understanding what you need to do after the situation on the market has changed. So also I wanted to mention important feature of both the engulfing and the harami. So what is really important is that the opening price of, let's say here is something like look alike to harami, well, almost, but it doesn't correspond that well, but still it look really alike. The most important that the opening price of the next candle should be with a gap, so it should be significant change. Here we see that the price has changed, like, hold on, 10620, 10609, so well, pretty significant difference. So the jump was like pretty big between here and here. So there should be a small gap between the close time of the previous candle and the opening price of the next candle. So there, the gap also shows us that like some dramatical changes in price, and that this is harami. Of course, they shouldn't look like that, because these like more look like the hammer, but even not a hammer, but still. So remember the most important feature. They have so for both harami and engulfing, the two candles should differ with their size. There should be a gap between the close time of the first candle and close price of the first candle and open price of the next candle. Shadows and body of the following candle in the harami case should be within the body of the previous candle, and in the case of engulfing, it should be within the body of the next candle. In engulfing case, they should be of opposite color. In harami's case, they can be the same color. It's better to search both harami and engulfing within at the end of a long trend, and they can they can reflect the change in trend. So for us, that's like an invitation to enter the trade and to make some money on that. Well, basically that's the general information that I wanted to give you today. So as usual, if you have questions, you can write them to me here. You can also ask your managers for more detailed information, and for those who want to learn individual lessons, we at Finmax, we offer such opportunity. You can join the educational course of our company, where we work significantly with our traders, where we give individual sessions, individual courses, and individual information, where you can like in real time ask about something what is not clear, ask for help with some strategy, some approach to trading. So we are always glad to help with that. Okay, so right now I want to thank you for your attention, for those who right now are present with me, and for those who will watch this educational lesson on our YouTube channel. Also, I wanted to invite you to my Thursday's live trading webinar, where we're gonna open a couple of trades, where we're gonna make some money, and I am gonna show you the real-time trading, the real-time making money with Finmax. And one more time, thank you for your attention. I hope that this lesson you will have some use from this lesson, and with its help you understood a bit more about the market. So thank you, and see you on Thursday. Bye bye.